This is going to be a video on the 10 reasons not to use a bank. The number one reason to not use a bank is because a bank is a company that is designed to make profit by the use of other people's money. A bank does not use its own money to make profits. It makes its profit by use of other people's money. A bank only is required to hold a fraction of deposits as its reserves. It used to be 10%, but recently it's been dropped to zero. Volt cash and reserves are at 0% required, and it's called fractional reserve banking. And that as well is another reason why not to use a bank, because a bank is only required to hold a tiny fraction of deposits and is able to loan out a substantial portion more of, well, it doesn't loan out its reserves, but let's go into that. The next thing, when a bank gives out a loan, the loan amount is added to the bank's reserves once the borrower has signed the liability document. So a bank is, when it gives out a loan, it is not giving out a loan of its own money. It's giving out a loan of newly created bank credits that are added to the borrower's bank account upon receiving the signed liability paper. So whenever a bank gives out a loan, it does not give out its own money from deposits or from its reserves. It creates money from nothing.
Nothing.
Basically fraud when a bank gives out a loan. Reserve deposits are never used as a loan. All loans are newly created currency by the bank loaned out at interest. Because all loans are debted to the borrower as a loan from the bank, any cash value that is paid back to the bank is considered a debt payment, not income. So all loans that are repaid to a bank are not taxed as income. They are debt payments to a quote-unquote loan. Therefore, it is not classified as an income, therefore cannot be taxed. So all bank loans that are being repaid back are not taxed. And any company payroll is always controlled by a bank, by the check issuing bank, and payroll checks to employees are considered a company expense. Therefore, the employer is eligible for compensation from the IRS for employee expenses. So every company that has a payroll is compensated for the employee expenses from the payroll checks. And at the end of the tax year, the employer gets compensated for the employee expenses. And when the employer gets compensated for the employee expenses or the employee payroll checks, then the employee's wages falls under compensation. And when your wages fall under compensation from the IRS, that means your wages are taxable. If your wages were not paid to you in the form of a company payroll check from a bank, then it would not be able to be classified as an employee expense and wouldn't fall under compensation, and your payroll check could not be taxed. Only because your payroll check falls under compensation to your employer from the IRS, therefore your payroll check can be taxed as long as it falls under your employer's compensation. When employee wages falls under compensation, the employer sees employee wages, only when wages are paid from compensation are they taxable. Okay. All cash valued assets are owned by the bank, not the bank account holder. So every bank account, all the cash that's in every bank account at every bank does not belong to the bank account holder. It belongs to the bank. The bank can decide if it wants to give you the cash value in your bank account or not. The bank has the final word. All banks are committing fraud with bank loans and treasury bonds. By means of interest on bank loans, the loan plus interest can never be repaid without adding additional borrowing to make the unpayable debt to any loan. So basically any loan is not repayable because the interest that every loan is, the interest that's attached to every loan from a bank does not exist. You have to borrow the interest into existence. Therefore, the only way to pay back a loan is you have to take an additional loan to pay back the original loan with its interest. So then the next loan you have to pay off its interest with another loan, and so on and so forth. The loans can never be paid off as long as there's an interest added for each loan. The interest cash value currency never comes into existence without a new loan. Therefore, this is a perpetual loop cycle of fraud, and therefore should be boycotted by all means necessary.
Okay, I don't know how well I spelled all the words in this, but those are the top 10 reasons why you should not have a bank account, why you should not use a bank. Because they are committing fraud, they are creating bank credit loans out of nothing, and it's legal. And as long as it's legal, we will keep getting pillaged and raped by all these bank loans, bank credits, taxable compensations, and just non-free market money.